Okay, so I want to share with you guys the reversal patterns that I look out for on USDJPY. Okay, so USDJPY respects the normal, double top and double bottom patterns that we're all familiar with. Okay, but on USDJPY, it has a different variation. Okay, and the most common variation that is being formed on especially 15 minutes time frame and also the 1 hour time frame is something like this. Okay, first of all, in the downtrend you will see price dropping down, and at some point it will start weakening out. Price will start weakening out. Okay, failing to break lower prices. Now at this point, the traders that take that buy or sell an asset based on weak rejections, but we buy at this point, okay, with the hope that the asset is going to go up. Now this is what I've noticed that normally happens on USDJPY. You will see price drop down, okay, and this is clearly an institutional move to clear all the liquidity that is being built around this area. Okay, so once price drops down, it will start weakening again. Okay, now this is where people like myself actually buy this asset. Okay, now once price, now if per adventure I miss this entry, I'll wait for price to return back to this neck to this area. Now what most times price returns back to this area, okay, and drop from here. Now, once price gets to this area where it formerly wicked out before, it will start wicking out again, maybe one or two candles or three or more, and then return from here. So this is actually where I normally buy my I take a buy trade, okay, if I miss my first entry at this point. So this is one of the kind of the reversal patterns that I normally experience on USDJPY. You can go back to your chart and okay, back test this. Now this is one of the most wrongest place to rather, what is going on, what is going on okay, I don't know what is going on here, but this is the wrongest place to buy an M. The double top pattern or the double bottom pattern. Okay, that's the W pattern. What is going on? Okay, we have a double bottom pattern. Okay, most traders wait for price to get to this neckline before they buy. Now this is the wrongest place to buy this pattern, because from experience I've seen cases where when you buy from this, sometimes it works out for you, but most of the times, about 70% of the time, most traders fail trading this pattern because they want to buy from the neckline. When you buy from the neckline, one, you are going to your risk is, you are increasing your risk, because your stop loss should be a little bit below this tops, these bottoms rather. Okay, your stop loss should be here. Okay, now if this were to be on the higher time frame, this stop loss should be up to 40 pips, 30 pips, and so on. So but aside from that, buying from the neckline is wrong, because there are a whole lot of orders. Okay, there a whole lot of manipulations go on. I don't really know how to explain this very well, but I from experience I know buying from the neckline is very wrong. Okay, one of the best place to buy from the double bottom or double top pattern is from these legs. Okay, don't buy from this, because at this point you don't really know what don't buy at this area. Okay, because at this point you don't really know what the market is doing. Okay, but once price returns back to this area, and most likely most times at this leg, this first leg, you will see weak rejections. So once price returns back to this leg and starts weakening out again, it shows you that price is about rejecting this area. So this is the best place to buy to take a buy trade from a W pattern, and similar on a double top pattern. The best place to buy from is from the tops and not from the neckline. Okay, I actually use the neckline once price break below the neckline. I use the neck. I now scaling. I can decide to scale in. Okay, add more positions. Okay, but I don't take my first entry from the neckline. It is wrong. It is wrong. Okay, now okay, so that is it for this.